Stocks are collapsing all over the place. Meanwhile, we have other stocks making some huge upward moves that were very interesting here today. Wall Street's pulling a magic trick that I have to show you guys here today, where they're saying, look over this way, but we're actually doing something over here. We're going to get into that. We've got to talk about some assets that are rocketing right now because people are looking at those as potential places to put money here in the short term because of certain activities that are going on right now. Man, do we have a lot to get into in today's video, folks. There's a lot going on out there. I'm going to try to cover as much as possible in this video. It's going to be a beast of a video. I appreciate every single person that subscribed to the channel. Thanks for being here, folks. Let's get straight into this, okay? First Republic Bank down 61% here today. This baby is off a cliff. I mean, look at this. Just back in the summertime, right? In the summertime of 2022, $200+ stock. Here today, $31. There continues to be extreme fear in regards to many of these regional type banks, right? Look at Comerica here today, down a whopping 27% when it comes to that stock. KeyCorp, 52-week low. I mean, all these stocks hitting 52-week lows here today, right? 27%. I mean, these sorts of moves, folks, just show how panicky, how fearful this market is, even after the Fed came out and made its move, right? Zions Bancorp, 25%. It lost over a quarter of its value just here today, right? I mean, just look at this stock just very recently here. Absolutely astonishing moves. Fifth Third Bancorp down 13.5% here today. Incredible, right? Fidelity National Information Services, not to be confused with Fidelity Investments. For everybody that's out there that sees Fidelity and thinks, is that Fidelity Investments? No, okay. No, nothing to do with them, okay? But this stock down almost 13%. Now, there was a stock brokerage related company that was down. Now, Charles Schwab's many things, including a stock brokerage, right? And some of you guys might use Charles Schwab as your stock brokerage. I don't know, okay? But nonetheless, this stock was down 11.5%. So that is one I would be a little concerned with, at least, seeing the kind of moves this one's been making here recently. I mean, could we see Charles Schwab down? I mean, probably not. But I got to tell you guys, okay, that's scary. You know, the moves this one's making, that's downright scary, okay? And folks, let me put it like this, okay? If you are somebody that has over $500,000 in your brokerage account and you're with somebody like a Charles Schwab or any broker that you're a little concerned with, you could always split money around. If you feel like you want to have some money in one brokerage and some money in another brokerage, right? And let's say you feel like I want to have, let's say you have $600,000 portfolio and you say, I want to have, $300,000 with Fidelity and $300,000 with TD Ameritrade or whatever. Fair play, okay? Fair play. You never know what could happen. Is it realistic that many of these go down? Not very realistic, but it's better to be safe than sorry, as I say, right? Better to be safe than sorry, right? And if we know something, the one person the Fed's not ever coming to help is investors, right? They'll come to fix almost everybody's issues, but not investors. Very peculiar day in the market here today with the indexes, right? The Dow, what a word choice I used there, huh? How about that one? Dow down 90 points here today. S&P 500 down very slightly. And meanwhile, you had the NASDAQ up. You had the VIX up here today, right? Interesting. You had silver make a big upward move. Now, a lot of people are looking at silver and gold to put money right now. I believe GLD gold had 7 times the average calls placed on it here today. Call options, essentially people betting. Because here's a deal, okay? Some people view if times are uncertain, if the banking system's uncertain, a lot of people say, you know what? I'm going to put my money in gold. I'm going to put my money in silver. Some of the new age generation actually puts their money in Bitcoin, which we'll talk about in just a moment here. But yeah, very interesting day out here in the market here today, which is kind of the day I expected. I thought they would do something like this, where they try not to rocket the market in any huge way, even though the Fed basically just gave the green light, because they don't want to make the Fed mad in this situation, okay? They want to try to be good, okay? And so if you look at the NASDAQ here today, this baby really wanted to rocket higher, but Wall Street, they're a little smart sometimes, okay? Let's just put it like that, okay? And they wanted to rally hard, but we got to be good boys, okay? We got to be good boys. We can't get caught in this situation, okay? And so, let's start adding to these stocks, but not too aggressively, because they didn't really want the news to come out here today that the NASDAQ's up 3%, 4% and skyrocketed. They didn't want those headlines to hit because then it just looks like, oh, we know what the Fed's up to here. They're going to bail out everything, so it's time to go risk on. They didn't want that to come across like that, okay? And the messaging was very important. So the fact that the NASDAQ reacted the way it did today was almost a perfect scenario to not, get that, right? Bitcoin didn't listen to the memo because Bitcoin's still trying to learn the rules of this game, okay? And so Bitcoin's doing its own thing, making a massive upward move. They got the message from the Fed that they're going to try to backstop everything if there's any more potential systemic problems or anything like that, right? And they'll just make up special rules as they go along if they want to make up special rules as they go along, as they did with uninsured depositors, obviously, in the whole SVB Bank situation here, Silicon Valley Bank, and these others, right? But the interesting thing with Bitcoin, if you're wondering why this is up, it's more than just like, oh, the Fed's backstop and stuff, so now we can go risk on. What this shows me, the fact that Bitcoin was up 9% here today, is that especially a lot of the newer generation is saying, I don't feel comfortable having my money here, so I'm going to put my money in Bitcoin. Now, some of the older school folks that are looking at that and they're like, what? People think Bitcoin is a safe haven? What? I can tell you, a lot of folks in the newer generations, okay, a lot of the millennials and, what is it, the Gen Z, the one that comes after the millennials, a lot of those folks, to older folks that are 60s, 70s, 50s, 60s, 70s, 80s, they look at gold as a safe haven. But I'm telling you, for a lot of the newer generation, they look at Bitcoin as the safe haven to put money. And you can argue with it, but I'm just stating a fact. Like, that's the way a lot of people view it. They say, if I'm looking for a safe haven, I'm putting my money in Bitcoin, okay? Not really the way I look at it, but this way a lot of people look at it. And so, you got to understand there's certain people that get into Bitcoin because it's risk on, right? Which is kind of why you got this huge move here today in Bitcoin. It was obviously a combo of like people saying, oh, the Fed's backstop and stuff, it's time to go risk on, right? And it's another combo of folks that saying, this is my safe haven, this is what I need to buy, okay? And so this is why you're seeing things like Bitcoin, gold, silver all move. And there's different groups like to buy different things, right? Now, the VIX obviously is starting to run out of steam in this situation, right? Definitely starting to run out of steam. In order to get this VIX over 30, right, we're going to need a hot CPI or we're going to need more bank runs to pop this baby over 30. Let's just call it that. And so we're running out of steam here with the VIX. Yeah, you're going to need one of those two scenarios. If you don't get one of those two scenarios, this baby's going to start falling back down. Next thing you know, it's going to be 24, 23, and the market will start to kind of stabilize here. But these are two very important things here, okay? And those could absolutely affect it in a huge way. Palantir stock, very strange move from Palantir here today. Check out this stock. It was up over 7% today. 7%? It was by far and away my top stock here today, and it wasn't even close. I think my next closest stock was maybe a 1.8% gain here today. So very strange move out of Palantir here today. I couldn't find any big news on Palantir here today, right? They had news last week that Palantir landed this almost $100 million deal with the U.S. State Department. That was last week, so that's already been digested by the market. And yet this thing made this huge move, right? Check this out. Look at this. Over 62 million shares traded hands here today. Average volume's 42 million shares. Over 20 million more shares traded hands than the average volume. Extremely strange move from Palantir stock here today. Extremely strange. What this shows me is there's some sort of big buyer out there that's buying the stock. What for? I don't know. Okay, maybe they're just bullish on the long term and they looked at a day like today as a great time to be buying some shares, right? With some obviously fear in the market and those sorts of things. And obviously the stock's in the sevens right now. I don't know. I just think that's a very interesting move. We do know Palantir has about as good of a balance sheet as you can possibly have, right? We do know they just started to reach profitability and they're obviously expecting to be profitable in 2023 and for future years. So I don't know what's going on here, but that was a very strange move in regards to Palantir, okay? Coinbase, another extremely strange move, right? Coinbase up almost 11% here today. Here we got banks collapsing all over the place, and you got Coinbase skyrocketing almost 11% in one day. Look at the volume here today. 31 million shares traded hands. Average volume's 18 million, okay? If you're wondering why Coinbase stock is up massively here today, I'll tell you exactly why that stock's up huge today. The reason that stock's up an insane amount today is that move in Bitcoin, right? But not just that, there's something even bigger. The bigger thing, in my opinion, than even the move in Bitcoin was a move in USDC, okay? The fact that that baby basically repegged to the dollar is unbelievable. Okay, that's about as good of news that could have possibly happened in the crypto community. Because from my understanding, that has never happened where you've had a stable coin repegged to the dollar. So for crypto bulls, for Bitcoin bulls, for the whole space, for companies like Coinbase, I'm telling you that's about as big as it gets. And so between the USDC situation and that baby getting back to right around $1 there, and between obviously, Bitcoin pumping, that makes sense why Coinbase was up massively here today. Now, when we pull up my big tech watch list here, I call this Sneaky Wall Street, okay? Sneaky Wall Street. They were out there buying today, but they were trying not to spike the indexes because they got to be good boys, okay? But look at this. They were buying all their favorite stocks. Snowflake led big tech here today. Look at Mr. Softy. You know Wall Street loves Microsoft. You know Wall Street loves Amazon. You know Wall Street loves Salesforce as much as any company out there. You know Wall Street loves Apple. They now finally love Meta because Meta's done so many employee cuts recently, and they could have more coming here essentially, right? And so they love that one. So if you look at the move here today, this is what I call sneaky Wall Street. They were out there buying today. They were buying all these stocks, but they were trying not to do it in such a way that caught the attention in a negative manner in terms of like, oh, wow, look at Wall Street spiking huge, right? Because they got a signal from the Fed that the Fed's going to backstop everything, okay? Sneaky Wall Street, man. Always being sneaky out there. You look at a stock like Southwest Airlines, another massive day down for this stock. I don't know how many of you guys track Southwest Airlines, ticker symbol LOVE. This one's just getting pummeled. Down another 5% plus here today, right? Now, if you look at the stock, it's basically at multi-year lows other than obviously Rona, right? And so I've looked into Love a little bit over the past, I would say, week or so, because somebody actually in the private stock group, the private wealth group, brought it to my attention, which, by the way, if you're looking to apply to join my private wealth group, private stock group, it's a great time to do so. You want to do so in these sorts of time periods where you got a lot of scariness in the market, a lot of volatility. There'll be a pinned comment down there if you want to apply for that, okay? But somebody brought it to my attention because I don't usually track the airline stocks on a super heavy level, right? And I looked into Southwest Airlines, and what I can tell you is it's an okay buy if this baby goes under 30, maybe the $25 range or something like that. It's a dividend company. Obviously, it's going to remain here, but I don't love the airlines. And I think there's honestly better opportunities out there in the market if you're looking for like a dividend stock. And so I'll give you a good example here of a stock that I feel has more upside potential, less risk, and pays you a bigger dividend than Southwest Airlines. And I do not personally have a position in the stock I'm about to show you, but I could potentially have a position sooner rather than later, okay? And honestly, that stock is Cheesecake Factory Cake, which obviously owns Cheesecake Factory. They also own North Italia. They also own a bunch of other restaurant brands. But this one also has a super low. Don't be tricked by the current P, the trailing 12-month one. Their forward P on this stock is around, if I recall, it's around 12, which is a little above where Southwest Airlines, but not that dramatic. It pays you a bigger dividend yield. I think it has actually less risk than Southwest Airlines. And I think the stock will appreciate more over the next, let's call it 3 to 5 years in something like Southwest Airlines is. So that's that's the tough thing in a market like this. You got to look around and you got to say, where's my money best put right now? Is it, for the next 3 to 5 years, right? If you're a trader, you're thinking about the next 3 to 5 days. If you're an investor, you're thinking about where's my money best put for the next 3 to 5 years. And there's a lot of opportunities in this market, right? In Southwest Airlines, maybe it is an opportunity. But I'm just telling you, there's always going to be a better opportunity out there. So that's what we always have to weigh as investors. It's like, should we put our money here or here? This stock versus this stock. And those are tough decisions because you might like, many stocks at a particular time. But it's about building out a great diversified portfolio, 10, 15, 20 stocks, and then saying, where's my best 10 to 15 to 20 stocks I can buy in the market right now because there's thousands of stocks out there, right? Look at this massive epic move after hours in GitLab. This is a software related company, right? Down 37%. 37% after hours. This stock has already been getting hit a lot, right? Back in November of 21, this was a $130 stock. Now it's $27, right? And you look at their numbers and it's just like, we're still in a risk off market. Dude, you can't come in with these sorts of just horrible numbers. Their guidance came in way under expectations from my understanding, right? For Q1 and for fiscal year. When you got a multi-billion dollar valuation on yourself, you can't come in with this disappointing numbers in this sort of market. Non-GAAP operating loss of $64 to $59 million. I mean, no, okay, no. You can't come in with that. You come in with that, your stock price is going down heavily. I understand why that stock's down massively after hours. You can't do that, okay? Now, mortgage rates. So this, you might have saw this in the news here today. Mortgage rates, average popular 30-year mortgage rate dropped to 6.57% on Monday. That's down from 6.7% on Friday and a high of 7% back on Wednesday. Mortgage rates obviously loosely follow the yield of the 10-year Treasury, which fell to a one-month low in response to the failures of SVB and Signature Bank. In real terms, for a buyer looking at a $500,000 home, with 20% down payment on a 30-year fix, the monthly payment this week is $128 less than it was just last week, okay? Now, it's still higher than it was in January. Now, in regards to this, okay, so first off, this is some good news, okay? But I'm going to be honest with you guys, okay? If we're going to not have a much more severe, let's call it housing recession, we're going to need these rates to fall considerably more over the next 6 months, okay? If these rates can fall considerably more over the next 6 months, then we at least give ourselves a chance to have a softer landing in regards to the economy. One of my fears is that mortgage rates were going to remain extremely elevated, right, into the summertime. It was going to produce an extremely weak housing spring and summer. New home orders will start to dry up as the year ticks on and the quarters tick on this year for the home builders. And so they need new, fresh orders. But I'm telling you, with these mortgage rates in the 6s and 7s, it's just not going to happen. So we really need mortgage rates, 30-year rates, to get back down to the 4 to 5 range. If we can have that, then we can at least dream of the housing market being in somewhat of a healthy space come the spring and summertime. I think regardless, pricing needs to come down more, and that's regardless of what happens, even if 30-year drops. But if we're going to have even a possibility, we need 30-year to continue to drop. This can't be it, okay? We need further, much further drops here in the 30-year to make the affordability even somewhat interesting here, okay? So that needs to continue to play out, right? Now, we have big commentary. Jeffrey Gundlach says the Fed will hike rates next week to save credibility, but it shouldn't, okay? And he's talking about the Fed could be even potentially cutting somewhat soon, and they need to be done raising rates here. And it's a really fascinating situation because you've seen how fast things have shifted, right? It was everybody on Wall Street was convinced. This was, last month. Everybody was convinced that 25 basis points was coming for the Fed here, okay? Then next thing you know, we had some data come in that was a little hot. Next thing you know, everybody got convinced that 50 basis points was coming. And now all of a sudden, everybody's saying 25 basis points or, the Fed shouldn't even raise. And it's crazy how quick the market really shifts. And that's why I say it is pointless to make your investing decisions based upon what the Fed says they're going to do or not do. Because I'm telling you, they change their minds all the time. What the Fed's going to do now versus 6 months from now is a completely different thing. And we've seen they have no track record of being trustworthy when it comes to, them saying, we're going to do this, this is our dot plot, this is this and that. We've seen it consistently. And so don't try to make your investing decisions based upon what the Fed might do or might not do, because I'm telling you, it changes, and it literally can change in a matter of days. That's the craziest thing about it all. It can change in a matter of days, folks, okay? Now, we have this getting into a political situation now, okay? Very, very crazy political situation and how all this is going to play out, okay? So in a Truth Social post on Saturday, Trump issued an all-caps prediction. That sounds very Trump-like there, okay? We will have a Great Depression far bigger, more powerful than that of 1929. As proof, the banks are already starting to collapse, he says. The claim came as a Trump spokesman asserted in a statement to Fox News that, quote, Biden has presided over a catastrophic economy that has devastated everyday Americans and has caused misery across the country due to his anti-American policies, it says, okay? Now, obviously, this is, if you have tracked Trump for the past, 10, 20 years, even back in his Twitter days, he always made huge predictions and just, kind of doomsday stuff when it came to obviously that side and kind of what's going on, right? So it doesn't really come as a surprise there. But in regards to this, right, I'm telling you, Republicans are going to take full advantage of this time period we're going through right now to bring more and more attention to kind of what's going on with the bank runs and all those sorts of things. And it's going to get into a very serious political situation. And I believe there's going to be a lot of pressure from not just Wall Street, but from actually politicians for the Fed to start cutting rates. And you obviously even saw Elizabeth Warren last month already starting to try to put pressure, right? And here's the deal. in terms of the Democrat side, right, they've got to fix things and they've got to do it really, really quickly here because 2024 election is going to be here before you know it, okay? And if they want to have a chance in that election to do decent, they got to fix stuff and they got to fix stuff fast. Because I'm telling you, if this was already 2024, it would be a slaughterhouse for the elections. I'm telling you, it would be a disaster. Because here's the situation. The headlines are awful, okay? You've got bank runs going on. You've got banks collapsing all over the place, right? You have people still feeling very bad about inflation, right? You still have consumer confidence that is very, very low. It's not as low as it was last year when it was pretty much at the lowest we've ever seen it, literally in the history of the United States, even worse than the Great Financial Crisis, which is crazy to think, right? But at the bottom line is Americans are not feeling good right now about the economy, okay? They're not feeling good about anything in relation to that, right? And the bottom line is you might say, well, it's the Fed's fault, it's supply chain's fault, it's not the politicians' fault, right? At the end of the day, the average American public, they don't even really understand what the Fed does or doesn't do, right? They don't really understand how supply chains work or this or that or past policies. The bottom line is they're going to look at who's in office right now and say, this is your problem, I'm voting you out, okay? And so obviously on both sides, you're going to have a certain amount of diehards that are always going to vote for their party regardless of what the situation is, right? But the problem is in elections, you really need the middle folks that aren't really a diehard Republican, aren't a diehard Democrat to make those decisions on what do they feel, right? And I'm telling you, when people feel very uncertain about the economy, that's how politicians get voted out of office. It's a very difficult thing. You don't really see it when unemployment's super low and things are great, right? In terms of the headlines and all that stuff, and politicians get voted out of office. But I'm just telling you, like right now, this is a disaster in terms of the headlines and everything hitting out there. And so that side, they've got to get things cleaned up this year. And if they don't, and this stuff rolls into next year with, let's say, much higher unemployment, let's say a lot more worries about the economy, it's going to be nasty. And that's why I think there's going to be a lot of pressure for the Fed to cut rates sooner rather than later, because it's going to come from Wall Street. And on top of that, it's going to come from politicians on that side saying, you guys better get cutting here, okay? And if you look at like the stock market, for instance, since Biden's been in office, I mean, the S&P 500 is flat and the NASDAQ's obviously down in a pretty substantial way. And so this is, I don't think Wall Street's too happy about this. I'll just be honest. And so once again, we're well over 2 years into this situation, and there's just going to be a lot of political pressure. I'm telling you, there's going to be a lot of political pressure on the Fed, and basically them backing off. There's going to be a lot, folks. Now, in terms of me, it's business as usual, right? I was buying last Friday. I'll be buying this Friday. It's business as usual out there. There's a lot of deals in the market, and I'm talking about all over the place. Growth stocks, there's value stock deals all over the place, there's dividend stocks, and this is a perfect kind of setup to be a buyer in the market. There's a lot of fear in the market. There's a lot of people concerned about this and that, right? But at the end of the day, the Fed's already shown. They've already shown their cards. It's shown now at this point in time. They'll backstop whatever they have to do to make sure there's no crazy systemic problems here. They showed their cards. It's game over now at that point in time. If you're hoping on like, this bank's going to take out this bank and the Fed's not going to help, and no, they already proved it. Now we got this thing on lock in regards to all that. They showed their cards way too early, in my opinion, but that is what it is. They showed their cards, and so for me, it's just business as usual, taking advantage of deals out in the market, and for everybody watching this, like this is a type of time periods you have to be taking advantage, because I'm telling you, markets like this they don't just come around all the time, okay? Bank runs, stocks collapsing all over the place. This doesn't just happen all the time, okay? This happens very few and far between. And so when you get these opportunities, you have to take them serious, and you have to know where's the best places to put your money, how to invest, how to understand income statements, balance sheets, and those sorts of things. And so if you're looking to start taking investing serious, this is a great time period to do that. And if you're looking to apply to join my private stock group so you can learn directly from me in regards to all that, somebody who's been doing this for 15 years, that's going to be pinned comment down there. So this is the time, folks. Hope you guys enjoy this. As always, I appreciate everybody joining me. Much love, and have a great day.